kind of thing, but did you anticipate such a reverse?
Not at all. In fact, the decline in passenger numbers is even lower than what we had done with the industry for the 5-year permission application. We had not anticipated it at all. It took us by surprise.
So what happens then in your planning for tariff increases, for instance? Surely when you're looking at how much money you need to fund the operation, you would be building in different growth in passengers.
The reality is that the regulated entity, in this case ACSA, takes traffic risk. So no matter how conservative you can go in terms of your growth numbers and the quantities of infrastructure, if the market turns against you the way this current market has done, basically means that the loss related to traffic growth is your loss. So we will bear the cost of traffic loss.
What kind of debt have you built up? Because you've got a massive expansion program.
You remember the days of borrowing at 15%. In the year under review, we borrowed at 58%. And our shareholders have agreed on an efficient capital structure at 65%. We're already at 58. We will be spending another 5 billion this year, which will bring us just under 65.
So that's gearing compared with
gearing,
your equity.
Yeah.
Mm-hmm.
And it's
and you
quite
can't
scary.
go above 65%.
Never.
Does that mean you're going to have to be cutting? You're going to cut back on your 17 billion rand capital expenditure program?
We have already deferred close to 5 billion of capex for the period 2008 to 2010. But it will be the type of infrastructure that would have brought in maybe facilitation efficiencies for passengers, things that we could defer and bring them later that would still add value.
Big story, of course, for ACSA and for South Africa is King Shaka Airport, 35 kilometers north of Durban at La Mercy. That's ready to be opened on schedule next year.
We are on schedule. We have just sent our team to Heathrow to look at additional lessons. That is now the operating team at Durban. And coming back, it's very clear that the teams that we have now insourced to assist them on the preparation of the operational decommissioning to commissioning of a new airport. We've got the best team in the world. However, the 2 months to 3 months that we have from completion of infrastructure is tight. So we're going to have to work overtime to ensure that we can still operate at the right level of that facility.
What were the lessons to be learned from the disasters at Terminal 5 at Heathrow? You said you sent your team over to look at that. Were they able to unpack any particular issues?
Absolutely. While you can train your people as an airport business, as an airport authority, the reality is that the people that will mostly be using it are your partners, the airlines, the ramp handlers. To be able to train their staff consistently on those systems every day, for the last month especially, is almost more critical. But you must remember they will still be running their business out of Durban. So we have to really work harder to schedule with the partners to make sure that at a minimum we've already started exposing them into whichever facilities have been completed. But we still need 2 months of the completed system to run with all of them.
So it's completely upgraded systems that will be at the new airport.
Very, very different from what we have today at Durban.
Looking at the broader picture, though, for ACSA, I see that you have now put a lot more emphasis on the non-aeronautical income, as you call it, the retailing, the shopping, property, etc. It is now significantly bigger in this past financial year, I think for the first time, than your aeronautical income. Is that likely to be a trend?
Not necessarily. If you can imagine, the economic regulator has required that we pre-fund our capital expansion and only get a tariff when the assets come into operation. If for the period 2008 to 10, we would have invested close to 16 billion. Imagine when we reopen in 2010, you would have brought in to the regulated asset base close to 16 billion, which means your asset base is 24, and the remuneration of it is therefore higher.
So you're going from 8 billion asset base to 24?
Yes.
In 1 year?
Yes.
And you've had to fund all of that.
Not in 1 year, over a 3-year period.
No, 3-year period.
Yes.
And you've had to fund that up front, but you haven't been able to get the tariffs to offset that.
Yes, except for the small element which has been brought into operation, but the bulk of it will come in 2010.
They must make negotiations with British Airways, South African Airways, one time and so on, pretty difficult from your perspective.
Absolutely difficult. I think initially when we were saying to them and the regulator to pre-fund when ACSA's capex is growing by 249% is naive, because you're going to cause a peak in traffic. It looks good in the short term that we carried on the balance sheet. The challenge they were going to have is what happens to tariffs when we bring all of it into operation because of 2010. And I think the regulator is going to have quite a challenge to figure out how to deal with that, because he must also make sure that our balance sheet will still be able to have room when traffic picks up again to make sure that we predictively manage at least smaller investments in that.
So let's understand this correctly. You've got a huge amount of assets that are going to be coming into play in 2010. Does that mean that the tariff increase in 2010 is going to be substantial based on those assets?
Theoretically, it should be that way, especially because you've got a profile on your credit indicators, which would otherwise go even further down, because I guess the worst period is now, when you are funding and using the bulk of your revenues towards paying debt. What would you think the debt market would look for, or Fitch would look for? Because that was the essence of why Fitch brought us a notch down, because he was saying, how would your regulator have done that? Because it will make you not only worse off in the short term, but what if the airlines are constrained? What is he going to do? That was a risk factor that we faced. So the challenge is, in theory, you'd pick the tariffs, because now all the assets are in operation, and it's going to be a tough call. When you do that as a regulated entity, it is not read properly. It's as though you want a higher tariff. What we're trying to say is that you may be better off increasing it, starting with 18%, which is what we were proposing last year, and then a little bit more this year, so that by 2010 you're not asking for a huge tariff. Because on the other hand, we'll be saying our balance sheet is pressured. Please, we need the cash flows, and now we are in that that problem.
That's an interesting situation that you're going to be running into, and the airlines are going to be running into in the next year. But I guess anybody can sensibly say, if you look at OR Tambo and the magnificent facilities that one has today, somebody has to pay for it.
Yes.
And it's going to be the airlines, and by definition it will be the passengers.
Yes.
Monhla Hlahla is the Chief Executive of ACSA.